Prices are exploding across the board, and these three sections have the key to what comes next for BTC. We've been covering this now on the channel for many years, getting in at the lows, looking at how they develop across the course of a bull market, and then how do they end up towards the peak. This is the final section, the end game, if you will, for the entire cryptocurrency market, stock markets, and real estate. Of course, if you've been here on the channel, you know I'm talking about the 18-year cycle. We are leading into that peak. Like, subscribe. I've got heaps to get through in today's video with you as we end out the week, end out the month, and tomorrow celebrate my birthday. Guys, it's your home of macro cycle analysis with me, Jason Pizzino. As I said, heaps to get through with you today. Cryptos, Bitcoin, stock markets, and of course the real estate cycle. It is our 4th birthday sale, and as I said, it's my birthday tomorrow. You can guess how old I am. If you want to be part of TIA Premium, this is the best sale outside of Black Friday. That's a long way away. Link in the top of the video description. Name, email. There's about 24 to 48 hours to go on this sale. I'll leave the rest up to you. Guys, 18-year cycle. Let's start where we are here. And the good news, I have an update for this coming your way today. Check it out on X. Link will be down below. Winner's curse phase. We're coming to an end. And again, I'm highlighting the fact that we're starting to see higher and higher prices along with other signs through the market like commodities that have also begun to put in higher lows. So what happens in the winner's curse phase? Basically, everything goes up. We've seen that across the board with real estate, the stock markets, obviously Bitcoin's at all-time highs. Altcoins, put those to the side. That is like super degenerate risk on assets along with meme stocks and all that sort of stuff. So when things get into a hype mode, that's when you'll start to see those things go crazy. But for the rest of the market, we're seeing all-time high prices. So let's kick it off with Bitcoin, some good news and some, I guess, bad news for the quarter. But for now, we've got the end of the month for January. Looks like it's going to close out green here at 12%. What comes for February? You may have seen this before. 78% chance of a green month in February. However, I'm not holding my breath that it's going to be a super big green month. It very well could be. But if I take a look back at, say, 2023, it was almost flat there. So we had a pretty good January. And then through into February, we got a 0.03. So barely a green month there. We had a green month 2020, turned into a red. Obviously, there was a COVID dump. And then the market took off from that point. And another one here, this was through the bear market. So the January came in at 16%. The following month was red. So if we take out the bear markets, there's a good little strategy there to have a look at these percentages. Comes up at 80, call it 82% hit rate for a green February. So there's always the chance that you're going to see a red. Obviously, it's 1 in 5. At this time, we're looking at a 4 in 5 chance that we're going to see a green Feb. But I just did want to highlight the point that some of those greens aren't necessarily, big green dildo months, like the case of 2023, 11%, probably not that big of a dildo either, 2019, and taking it back to 2016 at 18%, and 2017, which the cycle is most representing. I'll get to that in just a moment. Looking at the quarters here, to close out, well, at least January, we've got 2 more months to go. Still in the green, obviously that's just January. But again, these quarters are looking at roughly 60% green for quarter 1. If we take out the bear market years, so that's 2014, 2018, 2022, that obviously improves the statistic here, 75%. So 3 out of 4 times we should get a green quarter 1. This is January into March. And with those quarters, they don't always have to be anything super impressive. You got 12% for 2017. The rest of those quarters look pretty good. 2024, we had a very strong one. 2023, we had a very strong one. 2021, obviously really, really strong. Everyone was going nuts. 2019, not so strong. And as I just pointed out with 2017, roughly only 12%. So that's what I want to have a look at next with the Bitcoin chart here. And the main thing I want to highlight, because we have a lot to get through, is the quarters within a bull market. How many green, how many red? So here is the Bitcoin bull market for 2021. This one here is 2017. This one here is 2013. Sorry, going all the way back here into 2010 into 2013. Note that there was 1, to 3 red quarters. That was for the 2013. Here is 2017. We had 1, 2, 3 red quarters. And for 2021 peak, obviously it started in 2018, 1, 2, 3, 4 red quarters. One of those quarters was obviously the COVID dump, which did recover pretty damn well after the biggest pandemic in our lifetimes, living history, and it still closed just 10% down from the previous quarter. So, I'm looking at that as definitely 3 red quarters. This one here was the outlier. It got 4, but it was a very strong close on that, for that quarter as well. So where do we find ourselves? Well, we've had 1 red quarter. We had another red quarter last year for quarter 2. That one there came in quarter 3 of 2023, and we're still without our 3rd red quarter. Obviously, if we go by the Bitcoin bull markets lasting roughly 1,000 to 1,100 days, that would take us out to the end of this year, so roughly quarter 4 in 2025. Maybe it happens late quarter 3, maybe it happens early quarter 4. That's not the point at this stage, but it is running out of time for another red quarter if we're going to see 3 red quarters in this cycle. And I think at the moment, this might be the quarter, of course, along with the other statistical probability of quarter 3 being that red quarter and then taking off into quarter 4 and the whole game's over. This would be the quarter that I would look at for any sort of red coming in. Doesn't mean it has to happen, but we have seen 2 greens and a red, 2 greens and a red, 2 greens. Maybe we get 3 greens. But if we get a red, I would still suggest that the bull market is not over based on what I was looking at and what I talked about in the intro of this video, with each of these sections of the S&P 500 basically being in a straight up bull market. This is a monthly chart with the Gann Swing Pro. This is part of the bundle for TIA Premium. So you've got TIA Indicator Suite and TIA Premium, all part of the 4th birthday sale. And on this one, we haven't seen any breakdowns of the monthly swing bottom. So that's really, really important to identify the trend and let us know that the buyers are basically stepping in every time we see some sort of correction. And that's essentially what's been happening this cycle as well. So we had the low in 2022, higher lows on the monthly chart ever since that point. And of course, the bull market has continued on with, through 2022, 2023, 2024, now 2025. We look back into 2021, same sort of thing here. Obviously, the COVID dump broke those lows, but it happened on Bitcoin, basically happened on the markets around the globe. And from there, you basically have all of the monthly swing bottoms intact until the bear market came through. We saw 2017, there was barely a swing within the overall trend. Really, really strong market through 2016 into 2017, had the peak. Then there was a bit choppy after that. Obviously, Bitcoin dumped into a bear market. And then 2013, we had the peak somewhere around November, December. Top, you had all of the monthly higher lows forming, and then this went a little bit messy from that point. So if we just put a highlight over each of those bull markets, you can see through these periods here, essentially, any time that the trend has been clean, the trend has been up, Bitcoin's been going relatively strong, then you get this choppy period through the middle, choppy period through the middle, another choppy period here, and that was actually a bear market for the S&P 500. Well, hasn't turned out very well for Bitcoin or for altcoins as well. So this is still well and truly on track here. Do we get any sort of monthly breakdown within the overall trend? It's always possible, of course, but for now, this has been relatively, relatively clean into the move to the upside. Now, although the S&P 500 didn't break any monthly swings throughout the last 3 cycles, the Bitcoin chart obviously has broken some of those monthly swings, and it's not uncommon for Bitcoin to break a monthly swing throughout the bull market. We see it generally early on in the piece. So 2015, there was a monthly swing break here. That was August, taking out that low, and then it was pretty much straight up from that point. You also had it in 2020, monthly swing breakdown, then pretty strong to the upside. And then most recently, it was a very weak one. On some charts, it doesn't show up because of the different exchange volume, of course. But for here, August 2024, we had the monthly swing break as well. So for now, things are still holding up. On the monthly chart, however, this is pretty damn close to the action. It wouldn't surprise me if we had a close here, maybe a reversal, march down, and then we start to get going from that point. Now that may line up with some of the economic data and economic narratives that are continuing to play out here. Arthur Hayes puts a good point in here. I'm not going to go through and read the entire article. Essentially, he's just saying, trouble ahead, but it's just looking at short-term stuff here. But US Fed to the rescue, essentially looking at money printing, and then goes through to explain how this can all work out, where there might be problems with the US. You'll see a bit of a mini collapse, a bit of a correction here, which is essentially the volatility that we're seeing in the markets. And then the US comes to the rescue again, potentially with that money printer and sparking up the markets yet again. But at the moment, it doesn't seem like they need to do that because of where the positioning is right now. The prices are still damn high. And for the S&P 500, it's only 0.7, 0.8 off a new all-time high. This climb here doesn't give me confidence that it's going to continue up in a strong fashion, just with the continuous overlap of the bars. So essentially through this whole period since Monday with the DeepSeek Wall of Worry event, you had a bounce and then a pullback and then a bounce, and then intraday there was a lot of up and downs in that period. So it seems like indecision, even though you're starting to see higher prices. But overall, the markets are suggesting we're going to see further upside. So the long-term trends here, even if there is still short-term indecision. And you can look back going all the way to November, nearly 3 months now. We're getting to next week, so the first week of Feb. This is the second week of November. You can see that's basically been in a trading range of 58 up to 61, 61.50, and it hasn't really gone anywhere. But when we look back at the overall trend, as I pointed out earlier in the video, pretty strong uptrends. And the markets, as I'll get to, many of those are still exploding out there, hitting new all-time highs. The NASDAQ, similar sort of trajectory here. This is a bit of a sideways grind at the moment. And as I turn on the indicators here, to the downside, same prices are still there as we looked at from yesterday's video. We've got the lows there at 20,600 and then the extensions here at 19,900. So the market can still drop. You'll obviously see a pickup in the fear, but that would still hold the macro structure intact for the next leg. The Dow Jones hit a new all-time high yesterday. As I said just earlier, we got new all-time highs playing out. Only just, it's not as impressive as some of the others here. The Australian market smashed into a new all-time high yesterday, closed at its second highest close in history. Today, Friday, last day of the week, last day of the month, new all-time high, pretty big move, and we've hit that first target as I showed you earlier on when we were watching this double bottom play out here. So you can use this type of strategy, this analysis of your fib extensions in your markets to identify different areas of support, resistance, maybe areas that the market might find some weakness, and then go on to hit those profit targets. So looking at 85 here and also looking further up to around 8,600 points. So that's your Aussie market hitting a new all-time high. The Dow Jones hit a new all-time high. Canada has hit a new all-time high. This is the stuff we've been following now for months and months on the channel. As the market was looking at, well, the media was looking at recessions all the way back here in 22, 23. The cycle has suggested up, and the charts, more importantly, were suggesting up as well. And the strength has continued to build. Look at the angle here from those lows, and then the angle starts to steepen and steepen. That's a sign of the end stages. You see it in crypto all the time. Doesn't mean this is the end, but it can get more ridiculous towards the end. It's like that saying, the markets can remain irrational longer than you can remain solvent. So, RIP to all the guys that kept trying to short this market on the way up. Some of those have even gone out of business. I think it was Hindenburg Fund went out of business, continuing to try and short the bull market. It's been a very, very long bull market. The top 50 in Europe, so your Euro Stocks 50, also hit a new fresh high. It's not at its new all-time high yet. That goes back to 2000. So I think it's going to happen this year, and that would be a 25-year all-time high price. We've seen, as I said, Thursday, new fresh high. That's been led by the UK, which is at a new all-time high. Huge bar to break out I love this sort of pattern here, where you get this strong move out, a pullback, and then basically it gets going again. And it pulled back right to the tops of those previous highs. So the same old saying, support becomes resistance. You can see that resistance previously now became support. So it's been led by the UK, top 50. Germany also hit another new all-time high. Maybe you're getting sick of me saying this, but we're looking at this all through 2024 as Germany kept hitting new all-time highs. And then late in 23, and it started to hit new all-time highs as well, going all the way back here. And again, in 2025, it's hitting new all-time high prices yet again. France hitting some fresh highs, not new all-time highs yet, but it's had a pretty strong run up. And I dare say it's going to continue in the footsteps of the UK and Germany, even though Germany has been 2 years in a recession, mind you. 2023, 2024 recession. They were talking about it, potentially another recession this year, but the stock market is where it matters. Where do you put your money? Where do you trade? Where do you speculate? I was going to say gamble, but where do you speculate? In the markets, and if they're going up and you're spot long, well, screw what the media is saying. Doesn't matter about this call for recession. Moving on to China, also having a pretty strong move here. So this is just on a daily chart of the last 24 hours. It had consolidated and now yesterday had a reasonable strong move up. We are getting back towards those resistance levels at 13,400, 13,500. But if we take a look at the gain that China has had since the Chinese government talked about turning on those money printers again, coming up to yesterday, that is now dead on 20%. So from that low, it went ballistic and then started to settle out again, just as you would expect, like we see with altcoins as well. When things go absolutely bananas, then it typically comes back. In this case, it's come back, settled for now, I guess. I could, just tone it down a little bit. It's settled above the previous tops. That's what this white line is through here. If I draw a straight line, and at the moment, it's looking like it wants to attack 13.4, 13.5 again. Japan still holding out at these highs. This was basically the previous old all-time high of 1989. So it was a 34-year high, broke it, came back, and now it's sitting on those levels. And you can see on the macro here, the higher lows just keep forming. And the last one, this is the emerging markets. India holding out here above the 50% level, just a couple of days up. Actually, you got 1, 2, 3. Look at that. If this is going to be that 3 days up, this would have to be a significant low. It is 122 days now from the top. So let's take a look at the 3 days up for India. Let's make a note here. 3-day rule in play. So we'll see how that plays out and whether it works on the Indian stock market, the Nifty 50. Okay, over to the US dollar, which at the moment has only hit the overbalance in price, but not in time yet. It needs to come lower and break past the low there of 106.77 before, or if, can't go above 110 before it breaks that low, and that would then satisfy the overbalance in time as well. Then we get to breaking the swing and the 50% level. But this could be that start of the move down for the US dollar, which then also helps out assets, Bitcoin, cryptos, etc. And we're also seeing an overbalance in price, but not in time yet for the euro versus USD from this particular low. So something that I'm definitely watching here is that's the big part of the DXY. And you can see that the overbalance in price is there because it's gone further than this particular run up, but it still needs to extend that in time. The other things that have burst yesterday was gold, 92 days since that previous top, so exactly 3 months, and it burst out into another new all-time high, taking out $2,800, now at $2,850. So this thing is still going on another run. You're seeing silver also push higher here, breaking past the 50% over the last few days, and also doing 3.8% in a day, 2% the day before. And for the energy sector, oil has also put in a little bit of a base here above those previous tops. Now, it's not confirmed yet, but you can just see how the market is starting to slow here after Monday 27th. There was a reversal, another test lower, and then another reversal. It's not basically just falling out of bed like it had done from that top. I guess for the support here, that's where I'm looking at, roughly 71, 71.50. And my narrative and theory on this is, I'm putting those two words together, is that energies are going to increase over this last period of the cycle, that is, and that's going to cause some inflation as well. And I think the market doesn't expect that. I could be wrong. Maybe that's the case. You know, some people might be still expecting some inflation, or they think Trump's going to take it, get it under control. Let's wait and see. It's still extremely early days. This particular data point here was super interesting as well, just with the short-term low for crude oil. So the crude oil futures declined 8 of the last 10 days. So they're looking at red and green, not the ups and downs bars that we focus on for our analysis. But nonetheless, in terms of the data points, 8 of the last 10 sessions from a 3-month high. So basically down 8 of the last 10 sessions. That's in red. Similar precedents saw the commodity rallying 91% of the time. So in terms of the probabilities that you're going to see an upside here for oil, 9 out of 10 times you're going to see that. And just looking at this particular graph, only going back to 2023, often when you see at least 8 of the last 10 sessions down, it's due for a bounce. And that was a pretty significant bounce. You got one little one here, bounce, another one here, bounce, another one here, significant bounce, has not broken past that low. And now we see another one at potentially a higher low here. So if we do get that bounce, that could be part of this bottom pattern forming, which has now taken roughly 2 years. The fear and greed index sitting at neutral, so not much to be said here. That rounds out the traditional finance update with a lot of those markets hitting new all-time highs. So the markets continue to push higher and higher, regardless of whether the investors believe that these markets can continue going higher. What's actually happening is that they are going higher. Now, in other news, I'm starting a new Instagram. I'll let you know when that is live with particular names here. I've got so many names to get through and have a look at, but I'll send an email out and also put it on these YouTube videos. Make sure you subscribe to the email list. You'll also get that report that comes out next week, and you get the TIA premium sale. Name, email address. I'll send an email out so that you know when that real Instagram is live. And you guys can choose to subscribe or not. I know some of you had some pretty strong opinions about Instagram.
You're just a bitch.
Nonetheless, let's move on to Bitcoin and cryptocurrencies. The exchange volume for crypto has dropped off yet again, as we've looked at over the last couple of days. What we want to see here is a pickup in volume so that we see more of the degenerates. And not everyone's a degenerate, I guess, but more money coming back into the system. The good news is that we're seeing higher lows. The bad news is that the interest has dropped off, and generally we won't see breakouts. We won't see massive higher prices unless the exchange volume comes back. Just take a look at November. You see the exchange volume moving higher. That was on the 7th. So we had the election on, what was it, the 5th, 6th. Then the 7th started to break the previous tops of the last 2 or so months. Then we got the really big move up. Right now, we're basically between a rock and a hard place, between the current high and the current low here. We take a look at the all-time values. It doesn't mean that the game is over yet. We're just putting in higher lows at the moment. More people seem to be joining the Bitcoin and cryptocurrency space and are finding their ways through these these exchanges, right? So what we don't want to see is a breakdown of this $50 billion level and for it to sit under here for too long. That would mean that more people are leaving, and it's going to take a lot longer to build back up unless there was some sort of godsend and the thing just shot straight back up to the moon. So for now, if this is not trading higher, it's unlikely that we're going to see the prices absolutely, at least for Bitcoin and cryptocurrencies, explode in the next 24 hours. But as I've talked about with all the other data I showed you earlier, reasons why I still think the bull market is intact, and it might just be taking some time, even if this period of Q1 might not be as clean as previous years. For the fear and greed index, for whatever reason, people are still greedy and extremely greedy for BTC. We're at 76. The last couple of days have been 70, between 72 and 70-ish. On top of that, with the fear and greed index, we just saw it break back above my little diagonal line here. It did hit extreme greed again. So I'm waiting to see how this continues to play out. Do we see another lower high form and the price continue to grind lower here into the 50% levels? Or are we actually going to see some of that volume come back into the game, put in a higher low, and start to push higher to the upside? And I've got a reason for why that could happen in just a second. So let's just finish off with the market sentiment here. Crypto and Bitcoin search volume has been down. Like, this is just all data. I don't have an opinion on this because it is what it is. I can't change these numbers from Google Trends. The trend for Bitcoin is down this week. The trend for crypto is down this week, so less search volume for that as well. Mirrors what's going on with the exchange volume and the liquidations. It's just sort of drying up at this point. But it's not necessarily a bad thing. It's that period where if we get these scare bars to the downside, then I think it's some good buying opportunities. And in the long term, that was the 12 months. We're still seeing higher lows for the search volume here, and over the 5-year period, which takes into account the previous cycle, still higher lows. So there's still growing interest over time, but in the short term, you're just seeing people come in and out, in and out. USDT dominance, again, continues to grind out. The good news on this is it remains below the 50% level, but continues to grind sideways here. Remember, if it goes above 4.2 and above the diagonal here, roughly 4.4, then that is bearish for Bitcoin and cryptocurrencies. Continues to remain here and grind lower, then that's a little more bullish. And the breakdown would be the area where you get this massive explosion in prices for Bitcoin and cryptocurrencies. Total cryptocurrency market cap, also rocking a hard place. It hasn't really gone anywhere. It's still holding up. Even if we did see some scare bars to the downside, to me, that would be a good space for some extra buying opportunity because of the macro cycle that's still intact. And on top of that, I think we're going to run out of time for some altcoins today. On top of that, Ethereum had a relatively good day yesterday, closing back above both 50% levels, $3,100 and $3,200, with a slightly higher low. Overall, the volume is still very low. It's still below average here. It could be building. The price it needs to get above is still $3,500. But the ETHBTC chart is the big interesting one here, which I will leave for a future video. Subscribe to the channel, like the content. I'll give you a little insight now with these turning points at lows. You can look at these time frames on a monthly chart here. I think it's a good one to bring up for the end of the month, obviously end of January. I don't think much is going to happen in the next 21 hours. Could we see ETH get back above 0.036 in the next 21 hours? I mean, look, anything is possible. It would be an absolute mega pump if it did 14, 15% ETHBTC in the next 21 hours. If that's the case, great. I'll try and make a video tomorrow. But if it doesn't, you've still got 8 months down. And the last time we saw 8 months down was back here in 2019. And that was the bottom. It didn't necessarily go anywhere very quickly, but it was still the low, higher low, and it started to push higher from there. So even if this does turn around, it might still be a bit of time to get back above key resistance levels. In particular, you've got the diagonal downtrend here. You have monthly swing tops. We have weekly swing tops to get above. We have the weekly swing bottoms and monthly swing bottoms and the 50% level. So ETH's got a lot of work to do. If it can do it and break through all those levels relatively quickly, then it could be on send mode, send it to 6%, 6.5%, 7%. And then the big one to tackle would be at, 8.5% to 9%. I don't know if that's going to happen in this cycle. I don't know if it'll ever happen again for ETH, but at least if we are to see some upside here, probably going to be some good things across cryptos. And for ETH, should be outperforming BTC at any point if it's able to break back above. And that goes along with the overbalance in time and price figure that we are watching now, which has been adjusted to 0.045. So that would be the overbalance in price. And ideally, it happens in a longer period of time than any of the previous rallies in this 8+ month collapse of the ETHBTC price. You thought you could get rid of me? No, we have one more to look at. It's Solana versus ETH. We've seen the extensions hit. So this is a look at which is going to be stronger. And I'll look at this in further detail with that video on Ethereum as well. If you want to see that, hit the like button, let me know. I'll put it in the comment section, pinned comment down below if you do want to see that. Here, I'm just looking at the strength running out in Solana versus ETH, just according to the charts. Maybe we've seen that last pump up and we've hit 100% here. Maybe it's got further to go. We'll wait and see. But I'll talk about this more in those future videos. Like, subscribe. 4th birthday sale is on now. And I'll see you guys back here at the next video. It might be a while as I'm heading to Thailand on Sunday for a friend's wedding. It's basically the whole week, but I'll see you when I see you at the next video. Thanks again, guys. Take care. Peace out.